Hello everyone, good afternoon and welcome to the live trade room and Trading the US Open live. So this is your opportunity to join us where we look for high probability trading opportunities, where we go through a bit of a process for us to identify these high probability opportunities. We'll then go through a series of, I guess, procedures that will allow us to execute those trades as best we possibly can. Then we start to focus on our ability to manage those trades, whether it's looking at the psychology behind what's happening in the markets, trade size, and dealing with perhaps not just the market psychology in terms of sentiment, but also your own psychology as a personal trader, and with all one aim, and that is to generate consistent returns when we trade these financial markets. Okay, so let's get straight into trading then. And we'll start, as we always do, with our risk warning. Just please do familiarize yourselves with the risks involved in trading these financial markets. Okay, so what we want to do now then, just have a very brief snapshot. Those of you that were able to join us this morning, we'll just remind ourselves exactly what the state of play is with regards to the news flow for the day. And as you can see, not an awful lot. Today, Tuesday, the 21st of August. And when we look at the news events, we had monetary policy meeting minutes out impacting the Aussie dollar, which provided a little bit of strength actually for the Aussie dollar. But we have actually seen a little bit of dollar weakness just creeping into the markets. So we do have the Jackson Hole as well, the symposium on Thursday, Friday, and Saturday. And that's quite interesting because you get everyone from finance back all together at conferences discussing global finance, and also central bankers discussing potential interest rate moves. So as a result, has the potential to be hugely or a significant period as to whether the status quo will be maintained or whether there will be further additional news coming out that could change monetary policy quite significantly. We obviously have to wait and see. In addition to the, so let's call them relatively minor news flow, we've also got our big macro events, which I'm sure you're probably very aware of. We had midterm elections in the US. We have global trade talks between US and China on the US potentially adding tariffs to Chinese exports. And the impact that can have on global trade. There's issues within Europe and also Brexit negotiations as well, and lots of geopolitical risks in various different parts of the world. Impacts with emerging markets, and also the Iranian situation as well, which is constantly unfolding. So lots of macro events, and we will of course keep a close eye on the news flow itself, the news events that can impact the markets fairly instantly. And as we trade today for the, I'm just gonna, I don't know why this keeps changing, but I'm going to, it's 107 or 108 now in as London time. So when we look at these times, they're all accurate now. So as you can see, we only have wholesale sales numbers coming out impacting the Canadian dollar, not of any major significance to any great extent. So in addition to that, we don't really have any significant major news flow that we need to be aware of. So let's get up our trading charts then, and we'll get straight into our some of the trades that we're looking for. We identified this morning at the US Open an opportunity to sell this market below the 1505. Now we're actually getting close to that breakout again. This would imply that we're potentially looking to trade, and we're just seeing that now as we speak. It's interesting to see how this market behaves off the 1505. We've been in a sideways pattern since the early hours of this morning. We are looking to capitalize on a bit of a break to the downside. This is one of our opportunities. As you can see, this is a 15-minute time frame. When we previously broke down to the 1505, and the 1500 level is a psychological level, quite an important level in this market also. I'm just going to put up a one-click trading tab. This market is pushing lower. We are looking to capitalize on a sell trade in the dollar. To just take a little step back before we take a step forward, we were looking at a rejection around the 1547. That's exactly what we're currently seeing. So when you get these markets moving into levels of previous levels of support, preventing prices pushing lower, we then find these levels are very significant in terms of this price bouncing off, and we're at this level which is of real interest to us now. So when we go into the 15-minute time frame, we can see if we can get a close beneath this level, and we've got about 4 to 5 minutes left to see if we get a close in a 15-minute candlestick. That will be quite useful. If it does pull back like it's currently doing now, we hope we're not going to get sort of continuing sideways moving price action in this market. We'll have to wait and see. Let's go down into smaller term time frames, and if we sell the euro dollar like we were discussing this morning, we're looking for an opportunity for this market to sell. So we've had the confirmed break on a 5-minute chart below the 1505. We are still effectively bouncing off that 1500 level. We'd like to sell it below 1500 if we can. So we've probably got a little bit of time. Let's see how this price behaves around these levels. When we go into the 1-minute time frame, you can see how things can change relatively quickly. We've got a 2-minute flush lower, and now we've got some indecision kicking in just around these kind of lower levels. So it's worth keeping a close eye on this, such a close eye that I'm going to continue to keep an eye on this price chart as I go through some of the other markets. The other market we were identifying this morning was the potential for some let me get this up on the screen, looking for dollar weakness. So we had this dichotomy in these markets this morning where if we saw some dollar strength coming into the market, we were looking to sell the euro dollar. If we saw some dollar weakness creeping into the markets, then the two markets that we've identified to look for opportunities to trade are the dollar yen, which has been strengthening up till today, ironically, and also the dollar CAD. So so what we've seen is a little bit of a, if we can zoom in a little bit more on that, we're seeing some dollar strength creep in to some of these markets. We're now quite strong against the yen, looking like it's going to continue to push higher. We're seeing some strength come in against the euro, and if we look at it on a 15-minute time frame as far as the dollar CAD is concerned, I'll show you what the price action's been. We were expecting this market to continue lower. Now, when it goes into the hour before the US Open, we'd rather wait and see, and we're getting this little flush lower. So I just want to see how price interacts with the 1500 level. We're only effectively leaving a couple of pips on the table, and we're very close to that level now. And let's see how price reacts around these levels here as we stand. You can see a little bit of strength coming into these markets. Euro dollar moving lower. We're getting a nice pullback off this low really today in the dollar yen, and we're seeing some fairly recent over the last 15 minutes. We're getting, let's say the last 45 minutes, we're actually getting ultimately a bit of positive price action coming into the dollar CAD. So that is all good news. It bodes well for a sell trade in the euro dollar. Just quickly looking at some other markets, we're seeing the strength come off a little bit, the bullish pound dollar, and like we've been saying, all of these moves represents some significant perhaps a bit of short covering rally, just a little bit of a reversal off the lows. So the Aussie dollar, this is exactly what we want to see. Not necessarily for opportunities today, but opportunities for tomorrow. And that's really what is currently setting up. So I just want to see, we're getting some yen weakness actually across the board. But this doesn't represent an opportunity, because we don't want to go counter trend. We were discussing a lot today the potential for downtrend to continue, so that's not a high probability trade to buy, but our euro dollar trade absolutely is. And I keep coming back to it just so that you can see what the state of play is. So it's looking like we might be able to capitalize on this fairly significant structural failure to the downside. Even on a 15-minute price chart, it represents a strong move lower. Now we've got a nice bit of clean air beneath this level, so we don't need to panic and fret about getting in. I do, and I'm very anxious to see how this market behaves around the 1500 level. Do we get a bounce off like we're currently seeing? And if so, where do we get that bounce to? That will give us some useful information. So it's the next pullback that will give us the information to get in. In the meantime, I do want to keep a very close eye. We're looking to sell this market ultimately, looking for opportunities to sell, not necessarily to buy. We don't want to go counter trend. We want to go with the market. Like for example, the gold market is just rolling over. Now, if price action stayed like this tomorrow, this could give us some fantastic opportunities to take this market lower. So we will come back to the gold market in a minute. And the US oil is just bouncing off its lows. We do want to see this market, see if it can break the 63.59. If that's the case, that would be a really, really strong opportunity. More near term, if we get a turnaround around the $67 level, we can look to sell from a slightly higher price than what we're currently seeing on this chart. So again, we're not looking to capitalize on this short move. We're looking to go with the market, the prevailing winds more recently in the US oil, and see if we capitalize on a bit of a sell trade short term. And we're getting a bit of positive price action across the US equity stories, but we're running into these strong levels of resistance, just marginally higher. The 2878 in the S&P and the Dow Jones, the 25,829 level, represents roughly the same level. And as we look through the remaining equity markets, a bit of indecision with a bullish bias in the Nasdaq. Same situation in the FTSE. Really strong move today in European equities with a nice strong move. Again, it's kind of a pullback off a double bottom. So we want to look for more high probability trades than this. So that's the equity markets. Bit of a funny space really as things stand. Now we're getting that lovely flush to the downside. So what we want to do is to capitalize on a bit of a pullback now in this market. So we're getting that strong move. We are currently below the 1500 level. So now it's just a case of waiting for that opportunity to get into the downside. We did get the confirmed break at this level, the 1505. And we've had a good, strong sort of move down to the 1492. So ideally, a pullback round to the 1500 level could give us a really good opportunity to get in roughly at that particular price. In terms of stop loss, we wouldn't want to expose much more capital than potentially kind of a 10 or 12 pip stop loss in this market. If it pulls back strongly to the 1500 level and gives us the look like it's going to fade and roll over to the downside, we're going to look to take this market. We're not too far away. This is the 1 minute time frame now, so we want to trade this price action. So we've got all the ingredients necessary to get into this market. Now it just remains to be seen what move we're going to see below the 1500 level. And again, this is the prelude potentially to tomorrow's move. So from a daily time frame perspective, tomorrow could give us the real strong impulse to the downside. We're wanting to see a rejection off this level, which we've now seen. So if we got a red candle tomorrow beneath the daily low, we'd be looking to sell this fairly aggressively, to be fair. So with all this in mind, let's keep an eye on the 1 minute time frame. So we just want to get the confirmation that we need to trade this market. Now, to just let you know, in terms of our approach to risk, we're trading intraday levels. We have approximately $1,500 capital, which is very much an average deposit size across the board. Now, it does vary from brokerage to brokerage, of course, but we've decided to work with $1,500 just to make it as realistic and as accurate for many of you guys. So working with the average deposit size approximately might give you a bit of an opportunity to trade it as we do. So we're going to get in at this level, slightly lower than what we would have liked effectively. So now we want to see if, so getting in 96, so we're getting in at the $95 level. And we just want to place our stop loss just above the 1511. So the reason for that stop loss placement is we have a few strong sort of levels of resistance around the 1505. If we do get that little pullback to that level, then we can hopefully see, and if we can capitalize on a bit of the structure. Now, it hasn't made a great structure to the downside. Yes, we could move our stop loss to this level. We do want to see if there's more energy to the downside. Now we're below the 1500 level. If that's the case, we'll look to trade it to the downside and see what sort of run we get on the euro dollar. And our stop loss, so from a monetary perspective, we're currently selling the euro dollar. So we're exposing 16 US dollars in this trade. We have a 16 pip stop loss. So it's approximately, we're trading one mini lot, which is approximately $1 per pip movement. And as you can see, like if we're trading $1,500, then we're roughly trading, it's roughly a 1% trade. Now, just to make it clear, we can take one mini lot, two mini lot, or three mini lot trades depending on the setup and the opportunity. We're trading summer markets. We're not going to go too heavy on these trades. So we're quite happy to get in trade structure and be very, very consistent and disciplined when we trade these markets. So for now, we want this market to create a structure, and by that we mean like a strong pullback that can create a bit of a high, and if we get that next flush lower, we can then start mitigating risk. So when it comes to mastering price action, we need to have a method for identifying trade opportunities, and we've done that over the course of perhaps last night's Capital Growth webinar, the Daily Trade Watch video, those of you that might have been able to access that. Then we trade the markets this morning. We look to consolidate and have a strong handle and understanding of these markets. So we're able to identify these opportunities. We have a bit of a process to go through. Of course, they don't need to be winning trades. It's about us applying our strategies in a consistent and disciplined manner, and be patient like this morning that we needed to be in order to capitalize on the move eventually. So this market has great potential to the downside. You know, we'd like to be, from a fundamental perspective, we'd like to be selling, we'd like to be the bears, selling the euro dollar and the pound dollar for that matter. So it's just really looking, we know our directional bias, we know which direction we want to trade these markets, and we're looking to capitalize on a bit of a sell trade. So this market is creating a double bottom on a minute time frame. We're likely to get a bit of a pullback. Be interesting to see now if we get a pullback above the 1500. Now, if we get a little break below the 1492, then effectively we've got a new structure sitting around the 1500. And if we get a strong move, we can take off that risk on that trade. Do feel free, guys, to do say hello in the chat box. If you do have any questions about anything we've covered. Perhaps there wasn't really the time to get into a long sort of intro or how we assess these opportunities. It's largely been a follow-on trade from this morning's live trade room. So, and do let us know as well if there's any markets you're actively trading yourself, and we can have a look at it, or certainly give you our opinion or advice perhaps as we go. So we're currently in the euro dollar with the expectation for this market to push lower. From a profit perspective, we're obviously we're drawing a line in the sand in terms of taking a 16 pip risk on this trade. We know exactly what that monetary exposure is, approximately 1% of our trading capital, and we're looking for a multiple of that back in return. So if we get a 30 odd pip move in this, we'd be quite happy to bank that, which means we'd need to see the price around the 1465 level, somewhere around there, and we'll look to bank profits. But we will trade the structure, so we'll let the market determine exactly what we are looking to do. So if the market keeps creating what's called a series of lower highs, if it keeps continuing moving like this, then we're not going to get out of this and preempt and take profit arbitrarily. And that's some of the mistakes that a lot of traders that trade intraday prices, you know, it's the mistake that they can make, because why limit your profit? Let these winners run when they do occur, and then when you capitalize on a really big run in a move, you're going to get your fair percentage of them. You'll really see your capital grow, which is obviously what we're all here to do. So we know these markets pull back, so we're quite comfortable with a pullback. The idea is to place your stop loss at a technical level, where if we do get a pullback, even as far back as 1505, then hopefully your stop loss is out of the way. Now there's times when it can come back and clear you out, especially during the summer markets when the markets are a little bit more open to manipulation. But it has to work hard to take us out, and that's really what we want these markets to do. If we assess these markets and we get into these trades, what we want to do is to make it difficult for them to shut us out of that trade, i.e. If it's being manipulated, to actually really force their hand to manipulate to a significant extent. And that's why trading sort of lighter market conditions can just open these markets to that kind of behavior. So yeah, so sorry, I'm just looking at a couple of comments there. So we'll see there's a reluctancy to push higher, but I suppose you could argue the same for the downside. But I definitely prefer to be selling this market than to be buying it, and there's plenty of scope to the downside, as you can see on screen. Let's look at it in a bigger time frame. So yes, we have seen a nice move. We would like to see, actually, ironically, a bit of a pullback, maybe to this level. Might even give us another opportunity to sell it at a slightly higher position and add to our position. But there's a nice little move easily down to our target, which was roughly down here, just 2 times our risk, and that would represent a good profitable move if we get the opportunity to trade it in this way. Okay, so so Mike, yeah, you want to look at the DAX and the CAC? Absolutely, Mike. We'll have a look at that very shortly. Yeah, Matt, good question, and it's good to have you join us as well for the intraday trading. So you're very welcome. So rather than entering at market, would you recommend setting limit orders for day trading? Yes, we would. And you will sort of experience that if we're sitting at the trading screen like we were today, and I appreciate we just went live with our charts as the move was happening, so there was very little time to give you the preamble really into getting into the trade. But of course you can set a limit order. The problem is our limit order would be a little bit lower anyway, so in this particular trade we are quite happy to use a market execution. But to answer your question, Matt, absolutely we can use limit orders, and they work really well when we get a really strong sideways moving market for a prolonged period of time, where you look at the price action, you can create your support and resistance. So this is our support here, this is our resistance, and if you can identify a sideways moving market for a long period, you could quite easily do your analysis and say, if we get a break above this level, it's a no-brainer buy trade, and if we get a break below it, it becomes a no-brainer sell trade. And in situations like that, using a limit order or a stop order, should I say, like a buy stop order to buy above the resistance, or a sell stop order to sell below the support, would constitute a significant move. And in our experience as well, when you capitalize on these moves, you get a lot of momentum coming into the markets, because they're looking at some similar price action and they're looking to go with the market. Now, when you talk about limit orders, if you're looking at a buy order, you could obviously buy limit order. You could buy the market at support. You could use a sell limit order at resistance. That's a viable trade. It's not primarily the types of trades that we like to focus on, because obviously if we get this next move lower, it's the explosive moves that we're really interested in, not necessarily the perhaps shorter one. Now there is caveats to this as well, of course. You know, you can get a break above the resistance and then you get the explosive move and you're already in it from a lower price. We're just talking about probabilities. So if you're in a long term or a long period of consolidation, if you want to look at probabilities, the likelihood is you're going to get resistance, run into resistance at these levels. So if you're looking to run the position from this low, then it's a very viable trade, but you might run into resistance at these levels, which means you're kind of exposed and you have some decisions to make. So it's the breakout trades, which is the buy stop orders or the sell stop orders, that that could work really well in a situation like this. What the type of price action that you're looking for is potentially something that creates a bit of a series of kind of higher lows, where you could look to take a trade and maybe utilize when this market's coming back. If you identified a buy limit order, so buy limit order, to look to see if you can take this market to the upside from approximately these lows. Now that can work very, very well as well. So kind of horses from courses. The only reason you ask is because we want to see a pullback ideally. Yes, now you do have to negotiate the whole sort of 1500 level. That's the only sort of issue with it. What I'd prefer to do, if you're obviously in front of your trading screens, I suppose the major beauty about limit and stop orders is that you can place those orders and you can move away from your trading screen. But if you have the time available and you're trading the most liquid part of the trading day, which is the European Open and the US Open, and you're at your trading screens, then you can make the same decisions relatively easier if you're looking at these. If you see the exhaustion. So, for example, if you had a sell limit order at 1505 and the market bounces back to that, you might have your stop loss just 10 pips above. Now that trade might just pull back to this level up here, whereas if you're trading it organically, or you're at your trading screen, you might sort of see that it's going past the 1505 and just pause and wait and maybe look to sell it from 1510 or 1512. So pros and cons, there's arguments for and against using limit orders and stop loss orders and stop orders. So we do like to use them in the similar situation. Now, if we happen to be trading a long-term period of consolidation and we're like, if this breaks up higher or lower, we'll gladly get into this market, then we look to trade that accordingly. And maybe even place a stop loss order, sorry, a buy stop order, or a limit order, isn't it? Sorry, a buy limit order or a sell limit order, depending on the price action. Just trading organically just gives you a little bit more flexibility with that decision making process. But again, pros and cons, I'll take on board all eventualities. So 5-minute chart now on a euro dollar trade. We're getting the pullback off the lows. This is kind of what we want to see, and we have placed our stop loss at a significant level. We're just back to the 1500 now. What this might do is it might give us an opportunity to get into this market at a slightly higher price and add to the position. I appreciate we're a little bit exposed, but if we do get a pullback, we might just be able to add to it. So that's why it's not really a major problem for us to really rush these entries. If we get the analysis right, we'll get the pullbacks, we'll get the opportunities to add to our trades, and trade what we see. So this is on a 5-minute price chart. So we'll see how the dollar is rolling out against other markets now that we're in. So we're struggling to stay above the weekly high in the pound dollar, which is the 28.27. Again, we get the feeling that maybe tomorrow could present us with really good opportunities in the dollar if we see continuation. Is that okay, Matt? Have I kind of answered your question? So as we look across the dollar pairs, nothing has happened in this market for a couple of hours now. Even a little bit of strength, some strength creeping in as well. I suppose the opportunity to sell this market is fading every minute, so we're not going to spend too much time focusing on this market. We had a good discussion this morning about the potential to buy at this level. We have entered this little bit of a downward phase, a downward channel, but the overriding channel is to the upside since the early February. You can see this explosive move just working within this channel. So we have a channel within a channel really as things stand. But if we get an explosive break of this level, which is why we're interested in selling this market, then we might see further Canadian strength come in. Aussie dollar really struggling to push higher, which is exactly what we want to see. Maybe not from an opportunity as far as today is concerned. Yes, all good. I've never really used them, just wondered. You will see us use them from time to time. I suppose the biggest difference is we want to trade it as it unfolds, so it gives us a little bit more flexibility. But there'll definitely be occasions to use them. More so as well, Matt, for the Capital Growth webinar. We're going to trade some of the global equities and also the commodity markets. We're going to trade them in a slightly different fashion to that of the Forex markets, and that's just because of our brokerage, Handtech Global. It allows us to do that, where we'll be using these pending orders to navigate these markets, of course, while we're not at our trading desk and over daily time frames, so looking to capitalize on those bigger moves. So we're seeing the price action set up for exactly what we'd want to see. You know, if you asked me, if we got the explosive move to downside and it made a low at 72.03, if you asked me at what point would we like this market to pull back to, I would say roughly the 73.40 level, in and around this level. And it's looking, as things stand, that we're getting a bit of a rejection of that highs. That's exactly what we want to do if this market's work for us. Hiya Hans. Forex, I mean, if you want to explain kind of what you mean by your comment. Do you trade foreign exchange? And you're very welcome to join us as well live on our YouTube channel. Let me know what markets you trade. I'm not quite sure what you mean by the comments that you've stated, but feel free to post it there for me. Aussie dollar, we're seeing exactly the type of setup we're looking to execute. Seeing something very similar, that same level in the New Zealand dollar is the 66.86. Tomorrow this could present some fantastic opportunities for us. Strong rejection of these highs, no surprise in the euro pound, as we've been sort of saying for probably 10 months now as we're entering. It's no surprise as well from the negotiations that are going on regarding Brexit to see the euro pound sort of move sideways. So something like this as well, Matt, would be a really good sort of market to kind of suggest, as long as we're between the 86.24 to the downside and the 90.31 to the upside. Okay, it's effectively a 400 pip move over a 10-month period, and can give you some good opportunities to buy the lows, sell the highs, which is exactly what happened there a couple of weeks ago. It just literally bounced off the 90.31. So that's how and why we look to use or potentially use something like it would be a sell limit order, wouldn't it? So we're looking to sell the highs. So so we do offer at the Live Trade Room lots of education about using different pending orders and how to use them. There's 4 different types plus your market execution. So and of course your stop loss. So there is market orders that you guys need to familiarize yourself about. There's a wealth of information available through the Live Trade Room. And Hans, you're saying, can you do free trial without billing information? Unfortunately not. It's a requirement to access the 14-day free trial, but we do so without any obligation to continue. It's a cancel at any time policy. Now we do pride ourselves on looking to make access to this quality education as painless and financially. We want to remove those financial barriers to you when you trade these financial markets. So so we do just charge a very small nominal fee. And that fee begins at $9.99. So you're able to access all of our live trade rooms for $9.99 per calendar month. Can cancel absolutely at any time. So you can even access the 14-day free trial and then cancel your application, and we go through that process accordingly. So so to answer your question, I'm afraid not. Yes, and it's also a part of the regulatory side to confirm identity as well. That's important to note. So if you commit to that as a minimum, feel free to access the 14-day free trial. You're very welcome to cancel beyond that if you wish. You'll see how we generate consistent returns when we trade these financial markets, and really we're trying to change. And let me just sort of fill you in a little bit. What I'll do is I'll just go back to this market here just to keep an eye on it as we're talking. But I spent 11,000 British pounds on my education, and I can honestly say it was relatively poor all in all. So I certainly didn't get value for money. What I was able to do was benefit after the first couple of years of a lot of frustration, is to benefit from some personal mentorship. And that was really, really great from a professional trader that was able to put me on the right track and give me some things to really consider. And a lot of it was actually based on your ability to be consistent in your approach and disciplined and patient. And that was the origin behind the Live Trade Room, is to really pass on over 40 years of knowledge and experience to each and every one of you in a very affordable fashion. We don't want you paying anything like the fees. So all your €10 or $9.99 monthly fee, all it does is contribute to us to facilitate the back end of all of these live webinars. So we do make our own money from trading our own capital, and we do very, very well, and we want to share the whole experience with you in the most transparent way you could imagine. So in addition to our Euro Open, trading the European markets, trading the US markets, and also a capital growth webinar at 9 p.m. every evening, you really do get a very comprehensive education. And the idea is we don't want it to cost you very, very much at all. So, so yeah, please do, you know, get involved certainly if you like our approach. And we really do want to make an impact in this environment over the longer term. We're not in any rush. We want to slowly build what we're doing, but we're very ethical in our approach. Certainly, I hope you would agree. Perhaps our trading philosophy and the way we do it is easy to understand, easy to work with. You have the ability to ask us questions interactively as you are, and hopefully it will be a really rewarding experience for each of you. Mike, you said you signed up for the free trial. Is there another webinar at 2 p.m? Yes, you're actually talking about, so really those of you that do sign up, and I'll touch upon it towards the end in about 15 minutes, but we will be moving across to the live trade room to finish the US Open in the live trade room there. So that's maybe why 14-day free trial would be able to benefit from the full experience for 2 whole weeks without it costing you a penny. And then if you decide to continue your membership with us, which of course we hope you do, and we're certain you will, then it'll just cost you $9.99 per calendar month. And there's no tricks, there's nothing to be concerned about in any way, shape or form. And there's a lot of other free content available for you through the live trade room as well. So we're sure you'll find it a rewarding experience. And that's really what trading needs to be all about. And we do so live and interactive every day. So we'll certainly instill a strong approach and discipline behind your trading methodology. And you'll see the longer you're with us, the consistency come through in our approach, where we're quite happy to take a series of small losers, but once we capitalize on those big winners, you will see a multiple of our losses, and that's really how to grow, certainly at a smaller capital size. Now previously we were trading with 4 or 5 grand, and we just felt that it was alienating some of our traders who were trading with much smaller capital. A few people were taking the same trade size with us, even though we were advocates of calculating trade size individually. So we've listened to a lot of our traders over the last year or so, and we've put together this little package, which means we can trade these markets consistently with more reasonable equity. And you can see how we grow that equity as well, sort of in line with yourselves. So great news, Mike. Welcome aboard. You're very welcome to join us. And again, we will be switching over at 2 p.m. London time. So if you do sign up and you are a member, you'll gain free access. And you'll be able to join us live straight away through your members area. It's quite intuitive, very easy to use. So looking at the euro dollar, what we can see is a really strong pullback. Now we might look to get into this market again just at these levels, and that will overall be exposing approximately 2% of our capital in a trade that we quite like. We'd rather be looking for opportunities to sell the euro dollar rather than to buy it, but we will see how this price behaves around these levels. We're not too far away from our stop loss now. And if it gets hit, it gets hit. We'll still continue to look for opportunities to sell this market. Some of the difficulties you can experience when you're seeing sort of quite slow grinding markets, they make us feel quite nervous during the summer weeks. because it's well known during quieter markets that they are more prone to manipulation. So that is something to be mindful of. But we keep our psychology fairly clean. From a personal perspective, we want to see a pullback. We want to see these levels fail. We're getting a pullback exactly to the levels that we would like to see a pullback to, which is in at these levels. So we want to see a rejection around this level, and if so, we might be able to get into this market as well and see an additional move further to the downside. And if we break that low, then this becomes our new high. We can move our stop loss and really approach these markets with a really strong, clean psychology, if that makes sense. So let's see how this market, it might just pull straight back to our stop loss. We don't want to expose 20 or 25 pips to this market, so we might need to maybe take a couple of trades in this market to actually benefit from the move if we get the conditions, if the conditions are met. Hi Scott, do you think crude oil will continue its bearish run? It's a difficult one. It's a difficult one. This level has the potential to provide a little bit of support. The interesting level will be the $67 level. If we get a bit of a reversal off that level, we'd expect this market to push down to the 63.59, and a break at a 63.59. Sorry, 63.59. A break at this level would be a strong structural failure, pushing prices lower. And as you can see, there's nothing but air beneath this level. So the next level of resistance that this market would need to challenge would be the 67.01. Let me just briefly explain. Yeah, in relation to the China-Iran trade deal. Yeah, it'll be interesting to get an update actually from, I suppose, the Saudis in terms of the more recent state of play regarding the restriction of the supply of oil. The decision was made over a month ago now, if I remember rightly, to remove the restrictions that were pushing prices to the upside in the oil market. But ironically, I think this was the candlestick where the restrictions were removed, and we saw a really strong bullish sort of counterproductive move, really. And that was probably a little bit of manipulation, and then we got the real sort of structural rollover to the downside. So we'd expect this more recent sort of price action to prevail as things currently stand, but we do anticipate this market bouncing back to maybe something like the $67 level, and then if we get a break of the 63.59, we are further to the downside. So what we don't want to do is necessarily get too caught up in the fundamentals. Yes, we do want to have an understanding of what's happening, and if you remove the restrictions to the supply, you're very likely to see the price of oil move lower. And that's what we've seen from probably what date is this? The 11th of July. And that's what we've seen, a bit of a bearish market kick in. Now, what this might mean really is that this level, the $64 level, might become this market's floor. So to buy this market, what we would need to see is making a structural high, attempting to make a new low, and then if that fails, then that creates a higher low, and then we're wanting to see this market push in that direction, and that becomes our opportunity to buy this market. So we're not interested in buying the pullback, because that's all it is. That could reverse very, very quickly on us, and that doesn't represent a high probability trade. But if we create a structural high, get the pullback, and then see the extension to the upside, somewhere around the $67 level is the high probability trade in this example. So fantastic question. The whole Iranian restrictions that the US are putting on Iran with regards to the supply of oil do play a part. Of course they do. But it'll be interesting to see how this plays out from a price perspective. So great question, Scott. Thanks very much for that. Let's go back to the euro dollar. So now we're beginning to see the price action naturally sort of start to kick in. And let's see what's happening here. So if we look at this double bottom just sitting in this market, we got a strong reversal. Okay, it's probably a 10 pip reversal, and then we see the extension lower. So now this level here becomes really, really important, 1508. Now we still have our stop loss outside that level, which is obviously still exposed. But what this suggests to us now is that if we get a break above the 1508, then we're very likely to get stopped out of this trade. And if it reverses above the 1510 and we get a strong move higher, then it means a sell trade would then be off the table. So we are testing this market with 16 pip exposure. We do want to see like a double top be created around this sort of price action here and see this market start rolling over to the downside. That's what we need to see with this market. So we do now have a new low, and we want to see this level be broke, the 1491. So we're only 15 pips away from that level, and I'll just share with you what we're looking to see in this market is this market move lower. We want it to create a bit of a low in this market, and then we want it to attempt to move higher, ironically. So we want to create a lower high, and then you're going to start seeing a little bit more momentum come into this market, and at that point we would be a little bit more comfortable from a psychological perspective than where we're at now, because all we've been experiencing is effectively a double bottom, which represents an opportunity to push these prices higher. Yes, it is tradable. Running into these levels of resistance, it's not the type of trades that we look for. My pleasure, Scott. Hope you found it useful. So now this is the level that's really, really important for us, and we'll see. It's so important we could bring down, just mitigate risk on this trade. There's no point necessarily exposing. We can save a pip of capital on this trade. So if we do get a break, it just means that the markets are not interested in moving higher as things stand. And there's just no need to expose the extra pip really from a consistency perspective. So we want this price action to fail. We don't want it to break above the 1508. We want it to just roll over to the downside. And that would work very, very nicely for us. So we'll see, we'll see how we get on with that trade. So let's do a very quick review. A bit of softening coming into the US dollar as well. That's probably in keeping with the euro dollar. And what it will mean is potentially we are testing the market with a small trade, and we may not get the moves that we're looking for today. But like I say, they might be looking to set up tomorrow, and if we can capitalize on a small winner even today, then that will be great, bearing in mind the price action that we're currently seeing. So no significant opportunities of markets trading in the direction in which we want them to trade. The gold market is an interesting one. We'd like it to push back a little bit higher if we could. It's just paused there, which is just a little bit in the middle of nowhere. So if you trade support and resistance, you want to do so for the right reasons, and wait for the markets that bounce off these levels of support resistance. And if they don't, we do have a phrase: if you are in doubt, stay out. So that is a useful thing to learn in itself. You often see price action like this current level here in the US oil, and you'd be thinking to yourself, oh, if only this level was just a little bit higher, then you could look to sell it or buy it or whatever the case may be. And what you're actually telling yourself is, I'm in a little bit of indecision regarding this market. So under those circumstances, try and teach yourself to, if you are in doubt in your decision-making process, please do look to stay out, you know, and wait for that opportunity to reveal itself. because what we've learned over the last 40 years is that that's exactly the case. We will absolutely get more opportunities to get into these markets, and we are just cranking things up now going into the end of August. We're seeing some intraday strength in the US equities, same for the FTSE, but just to show you the price action in the FTSE market and some of these global equities is relatively poor. It's not great. The Euro Stoxx really strong day today in the Euro 50, and the CAC, which I'm sorry, apologies, I think let me see who mentioned, sorry, Mike. Yeah, the CAC really strong day today. We're not enjoying the price action that we're experiencing in some of these certainly European equities. Yes, they have the strong potential to see a bit of growth. We are entering earnings season as well, and there is sort of overall, I don't know what your own opinions are of this, guys, but there seems to be a little bit of a bearish sentiment, a bit of a risk-off approach to trading stocks and these global equity markets. So for all of that, we're getting a bit of a mixed picture, and that does not unfortunately bode well for us when we trade. So again, if in doubt, stay out. So what we've now seen is our structural failure to the downside. So we've pulled back to the 1508. We've attempted to make a low at the 1504. We've attempted to make a new high. So this is now a lower high, which is the beginning of a downtrend, and we are currently just about below this particular level in here, with the expectation now for this market to sell beneath this level. Let's see if that's the case, if we get the follow through. If this market wants to continue sort of playing games and moving sideways for a prolonged period of time, we're going to get quite impatient with it. And that's why we're quite happy to cut any losing trades short super quick. Sometimes it's not really worth putting in the 2 or 3 hours necessary if the market is not playing ball with us. But for now, we're absolutely fine. We want to see this market extend. We're only sort of 10 pips off making a new low, and maybe we can still trade these structures to the downside in the euro dollar. So that just about actually concludes the live webinar through our YouTube channel. So a couple of little things. Please do like and share. We would appreciate it if you would like and share you know, this event every day. We are here twice a day for the European Open and the US Open. So do subscribe to our channel below and do click the bell as well. And what that will do is you will be sent a little reminder to join us every day. So we're getting that good move to the downside. We could have got into this market again around the 1504. Apologies, I've just been a little bit distracted there. We still might get into it again to the downside, because under a situation like that, if we got in at 1503, for example, we could have placed a 6 pip stop loss or a 7 pip stop loss and really look to see if we get this move pushing lower. So we'll switch across, we'll switch to the live trade room now. So for those of you that are currently members to the live trade room, please do jump across now, and I'll be live there in just a minute or two, and we'll continue to trade for the remainder of the trading session and see what opportunities we get. So all that's left for me to do now is to just let you know that in addition to subscribing to our YouTube channel, you can connect with us through our Facebook, Instagram, Twitter and LinkedIn page. Currently up on screen, we're posting lots of new articles and information and things like that. So hopefully you'll find that useful. And thank you very much for joining us. If you do need to sign, I would draw your attention to the description below. And if you would like to join us, if you do like our approach, if you do like our price point of $9.99 per calendar month, with no strings attached, cancel any time, you know, then please do take us up on our 14-day free trial, and you'll get to experience firsthand what we're all about here at the Live Trade Room and what we're looking to do, which is to effectively educate you to trade these markets consistently and profitably. So hopefully you'll benefit from that. So that's in the description link below. So do share and hopefully thumbs up. And I just prematurely pressed the button for our for this piece of information. So listen, do take care, and we look forward to seeing you soon. From everyone here, bye for now.